Hey, how you doing? This is Greg McLeod from the Elite Traders University and the My Market Heatmap with our weekly Forex update. And today we're going to be looking at the economic indicators, the releases, news releases that could impact trading coming this week, the week of the 23rd of August. And we'll go ahead and get started with that. And let's go ahead and use My Market Heatmap. This is my powerful tool for actually determining different things in the market. We have heat maps, which are live right here on the front cover, and there's a whole bunch of tools and services that are part of that. So let's go ahead and get right to it. And you can see that clearly with the CAD is in the strong seat right now. CAD yen, CAD Swiss, also Aussie. Aussie dollar, Aussie yen, top spot, also euro dollar, which I traded just a few minutes ago. Let's get right into the what I like looking at the beginning of the week is to do a little bit of research using the economic calendar found on the Trader Tools. It's part of My Market Heatmap, along with a number of other great tools that are part of this suite. Go to the economic calendar, and we'll see if you're just using it for the first time, you can get access to this for $1 for 7 days, which is a pretty cool deal there. So we're going to look at high impact items here. So I'm just going ahead and you might get a little pop-up that you might need to close up. High impact items for this week. And we can look at Monday. We have the market manufacturing PMI. That's going to be at 3:30 a.m. Eastern time. It's going to impact the euro, and forecast was 65.0, previous was 65.9. Euro and the euro family of pairs will be in the mix there. Followed by 4:30, we have the UK market services PMI as well, purchasing managers index, expected to come in a little bit softer at 59.0 versus 59.6. They're basically unchanged. And we look at the pound pairs are going to be in effect as well. And we also have another I guess it's another UK manufacturing PMI as well at the same time. It's supposed to drop from 60.4 to 59.5, and so that's also at 4:30. That's for Monday. No high impact items for Tuesday, so we can look to Wednesday. Now, usually, if you don't find high impact trading or economic indicators on a certain day, it usually means that the currencies are going to trade in normal ranges, just from support to resistance, from R1 pivots, 4 pivots to some type of another pivot, maybe an S1 pivot, or just trade between a very narrow range until there's a big catalyst like the next news announcement, which happens Wednesday. So look for choppy sideways trading on Tuesday, look for Wednesday for our big movement at 8:30 a.m. Eastern time. We have U.S. durable goods orders, ex transportation, and high impact item. We're looking at an increase of 0.3% to 0.5%. So this includes things like refrigerators and any type of large item like washing machines and dishwashers, large appliances, things that don't move, like airplanes and trucks and boats and things like that. So that will be, heavily weighted to home purchases and things like that. So they're expecting a bump up to 0.5%. And durable goods orders with transportation are going to be at negative 0.4%. Previous number was 0.8%. This is due to the chip shortage and the supply shortages due to COVID, which have prevented the auto manufacturers from supplying, lots of demand, but the shortage of chips makes it not possible to produce the vehicles that are in demand. So overall, still it's a positive for not for the U.S. dollar. Please understand that with what I teach in our mentorship class, so something that they're not going to tell you out in the public is that when you have positive U.S. economic news, it is bad for the U.S. dollar because people will buy stocks. They'll sell dollars and buy stocks. They'll sell dollars and buy higher yielding currencies or more risky assets. Usually if you're running to the dollar, you're running into the dollar, buying dollar because of fear, because you want to be into bonds. It's a safety play. So anytime you have good economic news for the US, it is bad for the US dollar. This is not true for other currencies. It's somewhat true for the Japanese yen and the Swiss franc and the US dollar. Those are the three currencies that are usually not following the pattern now, for instance, if you have a good Australian economic data, the Australian dollar goes up. If you have good European data, the euro goes up. Good UK data, the pound goes up. Not for the US dollar. Okay. Now let's go. Thursday, we have economic data with the ECB monetary meeting accounts. And there's no forecast or previous number, but knows that 7:30 a.m. Eastern time we'll get movement in the currency. And also at 8:30. 8:30 is a typical news time for the US. It starts the US news cycle 8:30, and then the next time is at 10. Even though there's no news, there may not be a news announcement at 8:30. Sometimes you'll see the markets just knee-jerk and just move at 10 o'clock anyway, Eastern time. So gross domestic product, 6.1%, no forecasts given, and an annualized 6.5% versus 6.6%. So we have high GDP, but we're coming back from some really low levels due to COVID. It's a backward-looking number, so it has high impact, but sometimes it doesn't move the market that much because leading indicators and all kinds of surveys that come up before that, GDP is a composition of all those announcements or all those economic indicators. So the GDP is more backward-looking, so it's probably already priced into the market. So you might even see a sell-off, maybe if the data is good anyway, because it's already been priced in. Okay, so that ends. It's a very short economic data week, and it's also going into not next. Yeah, next week is the last week of the month. We're getting close to month end, so you might see some illiquid moves, especially with the summer. Summer holiday here in the northern hemisphere, where many traders are they're vacationing and they're not in the market. So if you are encountering a slow, sluggish market, it is due because of vacationing traders. Okay, and it's the opposite because so many retail people have the time off. They're off for summer, some summer school and things like that, so they have all this time to trade. But all the traders are on vacation. And so a lot of times they will take the retail traders will take their last monies and trade because they have all this free time from their job. And what happens is they get chopped up in the market. So, you want to really sign up and get involved with the Elite Traders University to learn these types of tips and tricks that can help you move from break even into a profitable trader. Okay. Well, let's get into the technical picture. How do we use this stuff that we've learned here to actually look at the market? Okay. Now, there are catalysts in the market. So let's go look at the catalysts. Let's see if I can turn off these notifications. Oh, stop. Okay. So let's get into, we're going to start with the dollar index. I like using the dollar index. This is TradingView. And I like looking at the DXY, which is the US dollar index, which is a basket of currencies versus the US dollar. Because once we look at the dollar, we can figure out what the other 7 currency majors are doing, because they all have the dollar in them. Okay. So here we go. We have the US dollar basket, and we can see we have an uptrend, higher highs and higher lows. However, we're moving into some old supply zones that we had from back in November. Lots of supply from September, and prices kind of taking its time or running up against this. We broke out of this red zone here, which was a previous high back here in April, and we broke through that, but now we're testing in the backside. The blue line is a weekly support line that was back here in March, and now prices coming back down. But we're still along the uptrend, but a little bit of a pullback. So we might see some weakness in the dollar and some strength in our other currency pairs. Euro versus the dollar. Euro should be stronger, and the pound and the Aussie. So once you analyze this one, we can almost stop the show and say, look, okay, you should know that you should be selling the dollar, and dollar CAD short and dollar Swiss short, dollar yen short, and that's gonna now the moment this probably hits the support line right around 93.11 or so, we might see that change in price, may rebound, and take out these levels, maybe move into this old supply area here. I mean, we haven't had any touch of price here in a long time. We broke to some, we don't have a high till 94.26, and we could hit that later in the week, but I think we have some dollar weakness first, and we can take advantage of that through some trades in the anti-dollar. And the euro is called the anti-dollar because before there was a different currencies. There was the Italian lira and the French franc, and there was this, you had the German mark. So you had all these other currencies that were, and I've got a mess right here. So I'm just going to go to another euro here. This one here, okay. Yes. So here's the euro. This is a daily chart of the euro. This is where we get a 50,000 foot view of the euro. And you can see that we were making lower swing highs and lower swing lows in a downtrend. However, we broke through a level of support from April 1st, 2021. Price broke down and now turned back up. So we have like an oops, put my foot through the floorboard. Now I'm trying to climb back up. So we're having buyers stepping in at this 1.1667 area, and we could go up till we hit this trend line here. So this is like the inverse of what we saw in the US dollar, where we topped out and we're pulling back, we bottomed out, we're pulling up, and we come back to this trend line here about the 1.1735 area. And we can actually use a Fibonacci to get a little bit more precise in our possible return trade, where we could possibly re-short the euro. Right now, bulls versus bears are I would be bullish the euro short term up until we get around the 117.59 area here. There's a 38% retracement, typical retracement for price. So we might go up today, manic Monday, turn around Tuesday somewhere in here, and we should see a drop, maybe a drop to the 1.1615 area. So I'm short term bullish, medium term bearish until we can get down here to this 116.15 area. There's lots of support here back from not April, but from November and October, September actually. We had the fall, we had a fall rally, another double bounce there. So we could pop up here, drop some more, and then usually the stock market's traditionally weak during this time, and and there is a connection between the stock market and Forex market. I came from the stock and options market, and currency analyst for a major brokerage, Forex broker. But there is very strong connections, and we teach about that in our Pip N Run Forex Scalping Boot Camp and our mentoring programs. We talk about the cycles and how all these markets are interrelated. And once you know the key to one, you can actually see how the others predict when the others are going to move. So right now we'll probably see the stock market rally. We'll probably see the euro, the Aussie rally versus the dollar and the yen. Might see the pound rally as well. And then probably on Tuesday or Wednesday we should see a turnaround and a drop. Okay. So pop and drop, and there's all kinds of things, full moon cycles, and really interesting things when we look at moon phases. When we see reversals at moon phases, and I will go into that here. That's something we talk about in mentorship as well. Yep, too many moons, huh? Yeah, but very, very interesting how this stuff works together. Okay, so again, bullish euro short term. Look for a turnaround maybe Wednesday. Okay, let's move on to the next currency pair that we're looking at. Pound is going to have some news. I'm only going to analyze the ones that are like tied to news. Pound versus US dollar, and we had lots of supply retest of the bottom, similar to the euro. a double bottom here at the 136.08 area, and we're turning up a little bit. And we have a stick sandwich at 37.40. And so we have 2 slices of bread with a piece of meat in between. So that's usually a marker set up by the market makers and players of a point of reversal. So looking at 37.53. So we're short-term bullish, long-term, longer-term, medium-term bearish, and then longer-term bullish, right? So we're looking at the being long pound versus US dollar, pound versus yen. Okay. We also have coming up, going back to our economic calendar, we got the euro and the pound, right? Yeah, the euro and the pound. Those are the 2 majors that we really wanted to look at for trading. If you wanted to put a US dollar pair in, we'll throw USDCAD, and it's usually, again, we got a nice sell-off. We extended, even this supply zone extended, price rallied into the supply zone, and we're coming down, and then we look for price to come down. So we're short-term bearish on CAD, and again to like Wednesday or so, maybe Tuesday, and then a bounce maybe at maybe 26.87, because we do have we have a trend line. We do have a rising trend line. Until this trend line is broken, we have to be suspect that this any pullbacks will give us nice shorting opportunities, but then a bounce for some type of a rebound, right? Maybe ultimately pull back to this trend line, 26.33, and then maybe a retest of 29.51 would be our double top, and we'll start our traditional rally in CAD versus the dollar. Usually the dollar sells off going into October. From October into like April, we usually have a decline in the US dollar. Okay. Now let's take a look at gold. I know some people have asked me about that. And I always forget. I say, yeah, I'm going to do it, and I forget. So I always be like, Greg, is everyone going to do gold? And gold really hasn't done too much since I looked at it last time, except where I wanted it to go. We had double top, and I don't know why I had an upward arrow drawn there, but I did have one drawn, and it didn't go there, right? And we got a huge drop into the demand zone. Didn't even see that, right? Which was a double bottom from way back when, the same kind of double bottom we had in the euro, right? And then price dropped and then rallied, and we're on top of the supply zone. And I drew these zones a long time ago, and I haven't looked at gold in a long time. And so we could see a triple bottom on gold, which is very rare. And I was actually probably looking at double bottom, a pullback, and a rally to one of there. It never got there. It just sold off after moving sideways. So maybe this trend line is a target, 1853.36. The buyer stepped in hard here. So with all that buying behind that wick, we should see at least a move back to the old double top here, 1830 on gold. Okay, and somebody wanted Bitcoin. I'll do a BTCUSD. Haven't looked at that in a while. I know it's rallying and making new highs. It's at 50,000, and people are pretty excited. I think I have some targets up there as well. And I'll just go ahead and move drawings. Okay. All right. I mean, we're basically filling in the gap here. We had big gaps here. We're filling those in nicely from the lows, the initial lows, and we could see. Let me go ahead. I'm just going to take these bearish fibs, and use those as targets, right? So we broke the 50% retracement. The next target would be at the 61.8% retracement. That's 51,286, and that was like the low of March 2021. Now, if we break that, we have a good ways to go to 57,183, and there's a lot of congestion there from May. You know, all the month of May was pretty lots of consolidation there, and we also got as high as 60,000 right there. Now, once we crack that, then the old high of 65 will be just a piece of cake there, right? But this is where people are getting really skittish about, because there are a lot of traders who are nervous about the 618 Fibonacci, 51,286, and there's a lot of debate going on whether it can break that. I think we break it. This is a gap candle down here, a vertical. Anytime you have a vertical move candle, usually price returns and fills that gap. So to show you pretty briefly, this is, again, we talk about this in mentorship, a lot of other little tidbits and things that you can possibly remember. If you just watch my broadcast, you learn these things, but unless you really have someone really drilling them into you and remind you, hey, remember that? You go, oh yeah. But you know, you'll see it and I'll tell you about it, or you can learn it as a system where you can actually have all the information organized in mentorship. So I invite you to sign up for apply, see if you qualify there. But here's the gap down, and here is, we look for reciprocity, or measuring objective where we actually symmetry. This is what the word I was looking for. Symmetry at the turning point. Symmetry at the turning point. So what we did on this side, we do on this side, or we're doing it on this side a little bit, maybe faster. From here, it took from May to July, May, June, July, 3 months there, and from July, August, September. So 3 months down and 3 months up. So that's our cycle, and so we look at that 58,000 there, right? If we break that, there's vertical candles there too, and we could just go right into, the market will try to fake people out here. If everybody's bearish, it'll take it up. If everyone gets bullish, they'll drop it. So it's very interesting to look at the sentiment and look at, the bullish news. We start getting bullish news like, Wells Fargo says they're going to have a Bitcoin fund, which they just announced. Or, everyone is thinking there's a $100,000 price target. If they start getting really, really excited, you might want to take some money off the table there. However, if people are doubtful and think it's going to fall, well, that's usually market goes in the opposite direction of sentiment. So we could see this this filled very quickly, within maybe like in days, moving from 50,000 to 56,000. We've seen Bitcoin move, $4,000 or $5,000 in a day. So that would be it for me. Now, if you are looking for mentorship, if you like what you heard here and you think that we could work together, feel free to come over to EliteTradersUniversity.com, and that's our website. And you can get some free information here. There's a free income boost blueprint to show you how to scale up your account and using proper risk management and other things there. There's also a free masterclass to show you how the Pip N Run system works. And there's also a button to apply, and you can just if you were to apply, we'll look at what you're doing. We'll ask you some questions about what's going on in your trading. You'll select the time and a date to speak with us. We'll see what you're doing wrong, see what you're doing right, how we can give you some suggestions and some other things. And then you'll have a blueprint to at least you'll be pointing in the right direction, not walking in the wrong direction. And if you want to work with us further, then we can show you what that looks like and see if you're a good fit and we're a good fit for each other. Okay. The strategy call, the breakthrough strategy call, is free. However, if you decide to work with us, there is a tuition. Like any other school, there's a tuition. All right. So I look forward to working with you, seeing you on the other side. And if you like this video, please like, subscribe, and forward and share. Okay, if you find this helpful, let me know in the comment box if you like something else you'd like me to cover, or if you have any questions about the markets or so. Place them in the comments below. Be more than happy to answer the questions. I'm an instructor of 15 years of public education, and I also work for the world's largest forex brokers in the world as a currency analyst. And so I'm at your service, here to help. Looking forward to see you on the beach with me, because I love the beach and could use some more friends. Talk to you soon. Cheers. Bye.